All right, folks, things are getting very, very, very interesting as we get closer to when the moon is actually going to be closer. Why? Because when you think it couldn't get better, well, we have some draw dropping news. I'm talking about what Credit Suisse, has now offered to the regulators and to the Department of Justice to actually help them, find out and collect information that will potentially be in the detriment of companies like, banks like Morgan Stanley and Goldman Sachs in the whole block trade probe that, the regulators are actually investigating on. We already knew that, a couple of weeks ago, SEC, the DOJ, and a bunch of other federal agencies were working in fixing issues in this current market. And well, lucky we are if you own AMC stock, because all of these issues indirectly or directly will impact the share price. And that's why these are huge catalysts, especially when we are getting closer to the month of March. All right. Yesterday, Credit Suisse then offered to actually help out, collect some information that I believe could be incriminating for the other banks. What is the rationale behind it? Let's find out. First off, going into the article, it will help you a little bit understand more about how this whole block trade things work. The thing is, Credit Suisse, was harmed a lot. There was, the single company that lost $5 billion when Archegos Capital Management last year, failed to actually, do a highly leveraged play in few stocks like Viacom, GX, etc., and other Chinese companies. Now that the bank has lost massively, after that, the regulators, the SEC started investigating because this was actually a very good illustration of what is happening here with AMC. Companies, work with big banks and they leverage as much money as possible in order to either short sell, either buy some stocks. But sometimes it doesn't work as, it was intended to. And that was the case for Archegos. So because this is a big issue, that can crash and bring down lots of banks and cause massive risk of the markets. That's why regulators and the Department of Justice started looking into not only what is happening here, with Archegos and Credit Suisse, but also outside of the financial risk that hedge funds are causing, because these hedge funds are doing the exact same thing Archegos did in the past year. Now, when it gets even more interesting is that the regulators have opened a wide range of inquiries into families' office rise and fall. Archegos is one of the example. Whether any stock prices were manipulated or banks colluding in the response of the firm's trouble, people with knowledge of the matter said. Last week, Bloomberg reported that the incident also led authorities to ramp up an investigation of block trading, a probe that's been looking in part of whether Wall Street firms have tipped favored clients to transactions big enough to move stock prices. Let me pause here for a second to kind of, explain it to you in plain language. When you're a big bank or you're a big, hedge fund, well, you'd have to work with somebody that will provide you with liquidity, with cash, all right? Especially in an easy money environment that we had in 2021. Now that, things are getting a little bit tougher because the Federal Reserve likely will have to start increasing rates, things are going to shift, things are going to change. But those hedge funds, in order to do big plays, because when they move massively. So they need to have a lot of money. They cannot only use the money that they have on the books, meaning the money provided by the clients. So they need to go a little bit further, extending leverages. But since money was so cheap, since the last 2 years because of the pandemic and what the Federal Reserve was doing to stimulate the economy, that money was so easy to get that it was like, in the blink of an eye, you can go 10 times what you was usually doing based on this easy money policy. But it created a lot of issues. Why? Because you're buying in blocks, all right, especially going through dark pools. Literally means if I want to move a lot in order to profit a lot, if I know, for example, if I'm Citadel, for example, and I know that, hey, this company is about to sell a huge amount of shares into AMC, for example, all right? Then what I can do is talk to my other clients and tell them, hey, or other banks, tell them, hey, this is a big move about to happen in the market because I see in the order book, I can see the depth, I can see which are the prices, I can see the levels of the positions. So if they're selling at 10, or they're willing to buy at 10, well, if it's right now at 15, you can go ahead. You can go ahead in front of them and try to short it to maybe 5. But because it's kind of a sure thing, it's kind of a done deal already. Well, they are willing to go as extended as possible because it's kind of guaranteed, if you see what I mean. But it's causing a major issue because sometimes, plans don't work out the way you intended to, the way you expected, the way you strategized. And that's precisely the reason, or one of the main reasons, why AMC hasn't been trading to the full potential of where it's supposed to do, what it's supposed to be. All right. So now that Credit Suisse is now offering to work with, the U.S. Stock Exchange, especially after Morgan Stanley confirmed that a regulatory filing Thursday that the U.S. regulator and prosecutors are investigating various aspects of its block trading business. Well, what does Credit Suisse has to lose or has to gain around this? Let me kind of get you back to the whole RICO thing, because this is a systemic issue, meaning it's not something that only one person does. It's something that bunch of Wall Street banks, bunch of Wall Street companies in the last 10 years have been slowly doing. But because everybody's kind of involved in it, short sellers in one hand, hedge funds, big banks, research firms, media outlets, it's a scheme pretty much. And everybody gets its piece of the puzzle, its piece of the cake at its own level, at its own, stage. Now, in order to bring it down, in order to clean this up, it's also going to take years. And this is something that, the SEC, even before Mr. Gary Gensler came up, I believe we're already starting working on. But now, because it's such a massive issue, you need to also have big tools. And that's why they were considering a couple of days ago using the RICO Act, because the RICO Act pretty much will give them a lot more authority into using whatever power, in order to bring down this system, because it's kind of similar or related to what the mafia was doing. So if Credit Suisse has had a tremendous turbulent year in 2021, I guess there is a lot of pressure on their hands, especially from the shareholders and the clients, because since then the stock has been kind of going down and down and down. So they are now finding themselves in the tough spot. And they were also part of, if I'm not mistaken, some of the firms that were also short selling AMC stock. I don't know if they are still holding that position or no, but the truth of the matter is, if someone within the scheme is actually offering to get out and to actually work with the regulators in order to find dirt on the enemies, it's either because they know something that will actually give them a certain leverage to reduce, the pain, or rebuild or help them rebuild the brand. All right, because 2022 is so far it's gonna be a tough year in the stock market for those big players, because of all this cleanup that everybody at the regulator level, at the White House level, is trying to put in place. So either they want to rebuild the firm brand, the firm image, by helping out, and expecting a little less, damage, pain from the regulators, or they actually find out that, well, we are back against the wall. We are so back against the wall that we have no choice but to be let out. So they're turning down the backs onto the rivals, Morgan Stanley and Goldman Sachs. Let's see how it plays out in the coming days, but definitely this is something that will make a lot of waves into the business, into the industry.